session off. Just to let you know again that we will be recording this session, and please feel free to share with others. So we're delighted to have you here on this call for Cdfis, and which we like to call the Angels of Main Street. My name is Babbie, and I have the pleasure of being the president of the New York chapter of Investors Circle, which is the investor side of the American Sustainable Business Network, also known as ASBN. We're a unique, compassionate, nationwide group of folks. We do policy work, we have entrepreneurs, and we have investors who invest in the early stage seed stage startup companies that are often coming up with simple solutions to pretty major issues. So I'd like to acknowledge my colleagues, the ASBN team members, Pam and Tom and I, whom you'll hear from, are volunteers, but Derek is newly joined the staff a few months ago, head of the Sustainable Economy portfolio. He'll share a little bit later. And Felicity, thank you. We couldn't do this without you. You're amazing. Felicity wanted me to remind everyone that we've been doing this for a while. This is our 140th ASBN live session, and we welcome you to check out any of the recordings that are in our library. So Felicity is also in charge of setting up our conference, which is happening in December, ended in November and beginning of December in San Diego. So there's still a few spaces left. If you care to come, we'd be delighted to have you there. So let me talk about a little bit why we decided to focus on Cdfis and Main Street lending. As many of you recall and are trying to forget, that at the beginning of COVID pandemic in March of 2020, we were still scrambling for toilet paper. We were washing our grapes. We were leaving our mail outside the front door. And we really didn't know what was going to happen to the economy. People thought their portfolios were going to collapse, that maybe their banks wouldn't survive. We didn't know. But just to illustrate the compassion and the warmth and the generosity of this group of investors, I want to share with you that we put every single entrepreneur onto a spreadsheet that we cared about, and we divided up that list. We got on a call in March, and we decided we were going to reach out to each and every one of them. We called them to see how they were doing, how their families were doing, and did they need anything. This group of investors offered keys to houses, cars, and they started writing checks when we knew that our entrepreneurs were close to closing contracts and they'd worked so hard to build and maintain. But what we did discover is that the Cdfis were really the angels on the street. The big banks were not able to support our entrepreneurs with PPP loans. And so this angel appeared, Pam Porter from Philadelphia chapter, when I said I want to highlight this great work. Well, Pam has a decade of experience, and she willingly joined me in this venture, and we didn't know where it was going to lead, but Pam has since compiled the largest list of investable Cdfis, which I know Tom and Dorothy will also praise, because it is the only list available that contains resources and 70 Cdfis out of the 1,300 that can take individual investments. So we want to highlight that work. We want to let people know that they can invest. And we also want to say that we've moved several $1 million as a result of these conversations. We've had several webinars with people around the country and great organizations. But another gem arose was Tom Abood, who you'll hear from in just a minute, in Colorado, who said, this is great. I want to take this to my Unitarian community and bring it back to the faith organization and see how we could invest our endowment funds. So now, thanks to Derek and Tom and Pam and others, we have an entire faith-based working group of really trying to expose people to what they can be doing with their endowment funds, investing in the communities that they believe and support. So you'll hear more about that from Derek, about our faith-based work, but I really just want to turn it over to Tom and thank you all for being here and the wonderful work that Pam and Dorothy and Tom have created. I'm looking forward for you to hear more. So off to you, Tom.
Well, that was short, Babbie. And thank you for calling me a gem. So why don't we go to the slides now? Or Pam, weren't you going? I think Pam, aren't you up first here?
Yeah, why don't I move us forward? Hi, everybody. My name's Pam Porter. And as we get started, next slide, please. Of course, because we are talking about this topic, we've got an agenda. So I just want to give you all a sense of how we're spending the next hour. We are going to be defining what are Cdfis. We want everybody's knowledge level to be on an even playing field. Some of those of you on the call work for Cdfis. You're very knowledgeable about them. Your expertise is really critical for this community conversation. And for others, this is a brand new acronym in an acronym soup. So we're going to just spend a couple of minutes defining the industry. And then our purpose is really about empowering individuals to feel like they have a path forward to put their own money to work in a Cdfi that will have impact on underserved communities, underserved populations, to really create real impact and real opportunity. So you're going to hear from three investors, Babbie, Dorothy, and Tom, and they're going to share their journey with you and their story about what they did, how they did it, and their words of wisdom to you. And then we'll have time for questions. So I would urge everybody, put your questions in along the way into the chat or save them up for this portion, because we really do want to hear from you. And then this is part of a larger effort, and Derek is going to give us a sense of the other activities that are supportive of this inclusive economy initiative. So without further ado, the next slide is our requirement to have a disclaimer. This is an educational presentation. We are not offering investment advice and urge you to consult your own legal, business, and tax and other advisors. So next slide, please. So someone already queued us up in the chat. They said, please define Cdfi. And we are very happy to do this. As you see, Community Development Financial Institution, 15 syllables. So no wonder we all say Cdfi. The term itself actually came from the establishment of a department within the U.S. Department of Treasury in 1994 as part of the Community Development Act, also known as the Regal Act. And this set up a permanent department within Treasury to focus on a more equitable economy through these financial intermediaries that were already operating in many parts of the country. They were initially established as part of the war on poverty, the civil rights movement, recognizing that addressing poverty, addressing civil rights does require access to capital. It does require access to fair, responsible financial products and services. And so the success of the early Cdfis led to its establishment as a permanent department within the U.S. Department of Treasury in 1994. The shorthand is that these are mission-focused financial intermediaries. All Cdfis identify a target market that is underserved. It is low income, low wealth, composed of people who are historically disadvantaged communities. They all provide both capital and capacity building to help their borrowers and customers to succeed. That is core to their success. That's the secret sauce, is their commitment to helping their borrowers and customers succeed. Next slide, please. So one of the things that people often experience is they will get to know one Cdfi in their community, and they'll think, oh, I know what Cdfis do. They do housing, or they do microlending. Well, the truth is most Cdfis focus on one or two areas And so if you know one CDFI, it might be that you know one CDFI. And so I just wanted to give everyone a sense of the most frequent types of lending the CDFIs are doing to have impact in communities. And you can see housing is the largest area. It's affordable housing. Supportive housing is a very big area for both sale, for rent, for rehab. Another big area is community facilities, things like community health centers, childcare centers, educational institutions, libraries, and you'll see the other list right there. I won't run through all of them. Small business lending is a huge part of the work that CDFIs did so effectively during COVID, especially. They were absolutely fantastic at reaching Black and brown entrepreneurs far more successfully than mainstream financial institutions. And real estate and consumer finance make up the other two. So just to give you a sense of the broad range of financial products and services offered by CDFIs. The truth is, though, you won't find one CDFI that does it all. They tend to specialize in one or two areas. But if you do have an area and you know one CDFI, you can always say, hey, do you have a colleague in the CDFI space that might offer something you don't offer? And they, most of the time, they should be able to offer those to you. Yes, let's move on to the next slide. Yes, there are some focused on agriculture and reforestation. I'm glad somebody asked that question. So just the industry overall, there are 1,300 certified CDFIs in all 50 states. They are in urban, rural, and native communities. And they range in size from very small, under $10 million in total assets. Some are $1 or $2 million to well over $1 billion in assets. So there's a wide range of sizes that they have. In aggregate, this number is a little out of date. It's probably getting close to 300 billion. That's with a B, 300 billion in total assets. I remember when I first heard this number, and it was a lot smaller when I first heard it, I thought, how can there be a 100 billion, 200, 300 billion dollar industry I've never heard of? But the truth is that while that is a large number, it is fragmented among those 1,300 organizations. And it is also still a small sliver of the $20 trillion financial markets in the United States. Here's another really important fact. The repayment rate on loans that CDFIs make as a whole, as an industry, is over 98%. And that has been true for decades, through the financial crisis of 2009, through COVID even. This repayment rate has been remarkably high. And remember what I said at the beginning, the secret sauce is the commitment that CDFIs have to their community and to the success of the borrowers. And that shows up in this number. They are accountable to their target market. So they need to show this ongoing commitment to hearing the needs and unmet needs of the people and institutions in their communities. And this last point, since we're talking about becoming investors, there are no actual numbers on this, but we have talked to many, many investors, and it is close to a 100% repayment rate to investors. This is last week we had Mercy Partnership Fund speak. They have been investing in CDFIs for over 40 years. They have, over that period of time, invested well over $100 million in CDFIs, and they have had zero losses. And so that's just a representative of what I have heard investors express is their experience. So we'll just move on just a quick couple of other slides to give everyone a sense of this industry. There are 4 types of CDFIs, and you will be hearing about at least 3 of these types today from our panelists. Half of them are loan funds or venture funds. These are not insured or regulated. It gives them a lot of flexibility and agility to immediately respond to needs in their community without having to get approval from regulators. And yet, only about 10% of them accept investments from individuals. And that's why the report that Babbie and I did, I think was valuable, because we listed out those Cdfis so it would be easy for investors to find who is offering a note program that an individual can invest in. Foundations and banks are much greater sources of funding for loan funds, but it is, I think you'll hear today, it's very exciting to be able to participate in a note program that is offered by a Cdfi loan fund. On the other side, about 50% of the 1,300 Cdfis are either banks or credit unions. And so they are regulated. A deposit in a bank or credit union is fully insured. And it's very easy to simply open a depository account and know that your deposit funds are having impact. So that is in some ways the easiest way to start your impact investing journey is by finding a local Cdfi bank or credit union. And you'll hear a case study about that today. So next slide, please. So I just wanted to give a quick overview of the ecosystem. So today what we're talking about is sources of capital that go through an intermediary, the Cdfi, to the users of capital. So in this case, we're talking about mission and impact investors, and you, the individual, or the institution that you're involved with, or a bank or a credit union, or a bank or a foundation or a policymaker. We're calling them mission and impact investors. They invest money either through a note that gets repaid or as equity in a Cdfi. The Cdfis do the work to lend into the low-income communities where there is a dearth of access to capital, and they make those loans to their borrowers and customers. Those loans are repaid, remember, at that 98% rate, and then the Cdfis re-lend that money into the community. That's what that circle in the middle of the graph stands for, is the multiplier effect, the reinvestment of those funds into the community. And for those investors that have made a note or a loan, that their funds are repaid at the end of that term. Many people have studied the impact of Cdfi investment. Most recently, Janet Yellen has shared a statistic many times in the public over the past year where she said $1 invested in a Cdfi generates $8 of private investment impact. Others have calculated it at $14. Either way, it's an outstanding return on investment. So I'll just leave you with one final slide on the next slide. And this is some of the reasons that investors invest in a Cdfi as an intermediary versus making a direct community development loan. Both are powerful, but some of the reasons investors choose to invest in a Cdfi or consider it a good first step in impact investing are listed here. And I'll just highlight that it is a way to have diversification with a small investment. You are part of a larger portfolio. You are really building on, you are investing in the Cdfi's core competency and their position in the community. You also have balance sheet protection. All Cdfis have loan loss reserves. They've got a cushion of net assets that protect against loss, so that their investors, even if there is a loss, their investors don't lose money. And so there's other reasons that are listed here that I won't go into, but you'll get the slides and you can see these for yourself. And then just finally, I do want to highlight resources that are available to you to learn more. On the next slide, please. And you can find these on the ASBN website. Babbie and I have really enjoyed working with Derek and others to create a dedicated page for Cdfi investments. And you'll find our briefing document, which is in the chat. And this explains why we went about identifying the history of identifying Cdfi loan funds. And then it includes a chart which lists out over 70 Cdfi loan funds that you as an individual can reach out to tomorrow and make an investment. It gives a little bit of other information about whether you need to be an accredited investor or all investors. It's about half and half of the Cdfi loan funds that are listed. You'll hear more about this paper, but there's a lot of other resources. We have a little bit of a step-by-step guide for those who are just starting their impact investing journey, as well as connections to wonderful intermediaries and coalitions, such as the Alliance of African American-led Cdfis is a wonderful way to find Cdfis. NALCAB is a wonderful way to find Hispanic serving Cdfis. ERIS, who I see represented here, is a wonderful resource for due diligence. And you'll find many other resources like that we encourage you to find. So that is the end of our overview on Cdfis. I hope that was helpful and level setting. But we're going to move quickly now to our first investor case study. And Matt, I bet you can answer this question on ERIS. So Babbie Jacobs has been my sister in this work at ASBN. We've really enjoyed working together. But she has a wonderful story to tell, and I'm going to interview her and prompt her to tell her story. And so maybe we'll put a spotlight on you, Babbie, as we get you to tell your story. So Babbie, tell us a little bit about how you became exposed to impact investing, and I hope you will mention Alaska in your response.
Thank you, Pam. And I can never say no when you ask me to do something, but didn't know much about Cdfis until I had the pleasure of getting to work with you. But, you know, to me, it's all about community. I come from, as you said, Alaska. I was a 30-year resident there, and I lived in a community off the grid of 60 people. And, you know, you have to rely on each other. So there you are, and there's your community, and you are each other's resources. So I look at Cdfis the same way. Thanks to the things that you've exposed us to, I can walk down the street in my hometown now of Brooklyn, New York, and see a local bodega that's supported by a Cdfi, whether it's not only just through the loans that they provide, but doing financial counseling and maybe employee transition ownership if that business owner no longer can run that hardware store of 30 years. You've got the Seed Commons and the Shared Capital Cooperative Cdfis that are supporting worker ownership and transitions. So I'm not sure I'm answering your question, but I think it's all about community. And, you know, as an impact investor, I came through this work from philanthropy, but I think there's space for leveraging funds in investing in philanthropic dollars. Where else can you get a return of $8 to $14 on a dollar investment?
Yeah. And so I know, Babbie, your connections with the foundation world in Alaska also led you to a pretty wide web of mission-focused investors. on the mainland? How do we call it? How do you call the lower 48
Lower
when
48.
you're the lower 48? But maybe just talk a little bit about some of those connections and where impact investing resonates.
So I think, having had the pleasure of working in a rural community when we were running a remote guide service, mountain climbing and river rafting and backpacking, to moving back into the big city they called Los Anchorage, where there were 275,000 people. I had the pleasure of working with the Alaska Community Foundation, where I got to travel to rural communities. And, conversations are held with a fishing pole in one hand and your rubber boots, and talking about setting up endowments in communities. And, the frustration lies in that the investment committees of foundations still think they have to be answerable to their fund holders and do traditional investing. But I think a lot of community foundations, including the Alaska Community Foundation, are now realizing that impact investing is crucial, that we have to invest in our own communities. There's some great Cdfis in Alaska now. And so if you're really going to make an impact, keep your dollars in the state, keep your dollars generating in the community. As Derek can talk about how important it is to have local banks, how the BIPOC communities are generating tremendous resources in their community, but there's 100-mile distance to drive to a bank. That makes no sense. So it's up to us to support this work. It's up to us to advocate with our community foundations through our donor advised funds, the work that Tom is doing in the faith-based organizations with the endowments there, with our alma maters. So we can move small dollars as individuals, but we can really leverage some big dollars and make some tremendous impact with the organizations we're part of.
That's great. And so, Babbie, talk a little bit about the transition to what you're doing individually. How did that come about, that you started to invest as an individual?
So, through Investor Circle, we've been investing in startup businesses, you and I, alongside each other, and businesses we feel great about. But those businesses need more support than our small checks can provide. They need financial counseling, they need guidance and support and peer networks. And that's where the Cdfis have been tremendous with their technical assistance. So I realized I had to put my money where my mouth was if we were going to do this work. So I went on the journey, and I have to say it wasn't easy. You may ask this later. Tom also invested in Awista. I grew up in Colorado and I lived in Alaska. How could I not want to support Native communities? I don't know how to support an Indigenous business, but I know Awista knows how to support the organizations that are on the ground and working there. So I invested in Awista. Derek will talk a little bit about the Transforming Business Ownership project that we're doing through the American Sustainable Business Network, of, how I have to look at my notes, but how, employee ownership is so democratizing. It's keeping people in their communities. So that's where I mentioned earlier, Seed Commons and Shared Capital are investing in employee ownership transitions. It's a big process, and it takes a lot of support.
When you put on your facial stuff, it'll go.
Oh, and we'll just ask folks to mute if you're not, if you're listening.
Brush, no, but it is that's its purpose.
It'll be a fascinating conversation.
Okay, yeah, yeah. We'll see if we can mute that. Yep. So, So just to wrap up, Babbie, what message do you have for our friends and colleagues on this call today, if they're considering this journey?
So one, know that you're going to make a tremendous impact, and it feels really great when you put your head on the pillow at night to know that your money is circulating within the community that you care about, communities. Two, it's not easy when, Tom may share that when you want to invest in Awista, it's not like you can just click on the website and say, here's my $10,000, please hold this for the next 3 years, and I'm sure you're going to do great work with it. it's not an easy venture, and work with your financial advisors. Pam and I are doing work with financial advisors because they don't make a big commission. They don't know this space. So we're trying to do that part in our education. So it's going to take all of us to talk to financial advisors, to talk to community foundations, to talk to our alma maters, and to encourage others to invest, our faith-based organizations to invest their endowments in meaningful ways. I will share an anecdote. I had the pleasure of leading a group of women facilitating. A friend of mine developed a course called Invest for Better, and she wrote a book called, I don't know if you can see it, but it's called Activate Your Money. And we made financial goals. It was to educate women about financial literacy and how do we know what we own in our portfolios, and how do we pick an advisor, and how do we do our financial planning. And I made a commitment to opening my community bank. I've been talking about it for 2 years since I met you, Pam. So I put in my criteria with all the great resources that you provided us. I wanted a local bank. I wanted local employees. I wanted to support BIPOC and women-owned businesses. And I wanted financial literacy. And I came up with 2 in the New York region. And I either had to be Ukrainian or Chinese. So it's not possible to get it perfectly. I ended up with Carver Bank down the street. I feel terrific about it. And, ask the employees why they work there. I think you'll find a pretty wonderful story, and they are thrilled to share it. So my advice is just do it. And you've made it so easy for us, Pam, but it's still going to take all of us to spread the message.
Great. Well, thanks. And so, Babbie, you're awesome. Thank you. And now we'll move to Tom, and I think you have some slides to bring up.
I am a slide guy. Thanks, Babbie. So life was humming along. I had totally invested in SRI funds. They were all in Wall Street. So what motivated me back in 2011, 2012 to divest completely from Wall Street and become an impact investor, investing in Cdfis and other similar community investments. Next slide, please. The more I read about Wall Street and what my investments were doing, and the more I looked at my SRI mutual funds, there were a tremendous amount of companies that I would not invest in one-on-one, but they were all lumped into these SRI mutual funds. What I found out, our financial and economic systems are extractive, exploitive, predatory, and racist. And as Amy Cortez pointed out, what we're doing when we invest in Wall Street is speculation. Really, it's making money with money. Nothing is going to local businesses or products. So,
all right,
please mute yourself, everybody. So how can I act on my deepest values through investing and the use of my money to create the systems that are more equitable and truly address racism and inequality? Next slide. David Korten, I've been a fan of his for a number of years, but he argues that we've really become bonded to the sacred money and market story. And it's a story that legitimizes this economic system that creates a utilitarian view of life and really warrants destruction of life as progress and reduces it all to consumers. So money and the market has been controlling really our focus for a number of years. And my concern is we're heading to the path of the next slide, please. I think this cartoon sums it up. All about creating value for shareholders, profits, at what expense? What does the bottom line really cost us? Next slide. And the gross racial inequality in this country, the disparity of wealth and income, this is some stats from really the US Department of Treasury in a story featured story back in July of this year. And you just look at the numbers here, unemployment rates, the median household income, family wealth, it's just staggering. And I was actually watching a public TV broadcast documentary earlier this week, and they referenced this disparity of wealth and income as really eating the soul of our country. And I would agree. It's just gross, the disparity of wealth. And unfortunately, our investments in Wall Street and Wall Street banks are contributing to that disparity. Next slide, please. This comes from some testimony. It was actually April 2021, about what the concentration of financial and economic power is doing in this country. And it's really impacting the most vulnerable, as it shows here, rural residents, and 1 out of 5 rural residents are Native American, Asian, and Latino. And the focus is the concentration of financial and economic power is really damming the flow of capital. We've heard of food deserts, but there's also called capital deserts out there, where underserved communities, under-resourced communities really don't have the options, don't have the access to the capital that they need to build their small businesses, affordable housing, renewable energy. You can see the stats on this slide that, Black businesses only get funded half of what white-owned businesses get funded. Wall Street banks are really not all that jive to lend to small communities. They're really looking at the major big deals out there. And the largest 4 Wall Street banks control 41% of banking assets, but provide just 16% of small business lending. The flow of money is dammed here in this country. And just like a dam on a river, it's really destroying the ecosystem downstream. Next slide, please. So how did I align my investments with my values to really create the systems that align with my values and principles, as opposed to just making money with money? And the following slides will give you some examples of the Cdfis that I invested in. Next slide, please. And you heard Oyster Corporation, that is based here in Colorado, Longmont, Colorado. It's an incredible Native American intermediary Cdfi. And I'll just back up a step. When I was on my journey back in 2011, 2012, Pam was not around with this great resource, but I found out about Cdfis and I started researching them and calling them one by one. One would say, no, we only take institutions. Another one would say, yeah, we take private investors, but it's a minimum of 250,000. And I said, thank you, and I'll move on. So it was a painstaking chore of going through this. So the resources that Pam and Babbie have put together are just awesome. But I went from looking at my Wall Street investment summaries every quarter of it's up, it's down, it's up, it's down, it's even, to getting statements like this. What did my investment in Oyster do? What is it accomplishing here? And just showing you, it's all about lending money to their communities, creating jobs, getting small business loans, housing units. And Oyster is a loan fund and a minimum of $25,000. Next slide, please. I also invested a pretty good chunk in the self-help credit union and self-help, it should be federal credit union, self-help credit union and self-help federal credit union. And this is a real no-brainer. It's a very simple, getting a certificate of deposit, putting your money into those financial institutions that then loan money to the communities in which they're based. And they've been around for I think 40 some years, and they've loaned out $10.8 billion. They're serving the Southeast, California, Washington, Illinois, Wisconsin. And once again, I get these quarterly statements that really bring me joy about what my money is doing. And this money is federally insured. It's given me a return. The principal is going to come back to me. So once again, it's a great, from my perspective, a great investment. Next slide. This is another CDFI loan fund that I've been involved with since divesting as well. I'm also passionate about what cooperatives are doing, and this loans money to cooperatives all through the northeast part of the country. And it's broken out into food cooperatives, housing, worker, and other community organizations and cooperatives. This gives you some of the ideas, some of the impact that they have accomplished in their since 1975. And look at the investment dollars lost. As Pam was saying earlier, 0 investor dollars lost. And this is a minimum of $1,000. And you can set your interest rate anywhere from 0 to 2%. And that may have gone up now with what's going on here with interest rates. Next slide, please. So this is my latest investment, and this is also another local CDFI, Native American bank, also serving the Native American population. And as simple as I went down there, met, and opened up a CD, and this is where that money's going to be going. You'll have time to look at these slides, because it's all being recorded, but just once again, the impact that my CDFI is having by depositing that into Native American Bank. And that is something that everybody can do. It doesn't matter where you live. Everything's done electronically these days. So that is a real simple process. Next slide, please. So how do you go about doing this? I think everyone needs to really articulate your values. What do you love? What gives you joy? What gives you purpose? And how do you align your investments and your life with your values? And money is really not the true wealth. It's really the quality of relations. We've talked a lot about community. Community is wealth. And the Cree prophecy, which I really enjoy, when all the trees have been cut down, the animals have been hunted, the water's polluted, the air unsafe to breathe, then we'll figure out we can't eat money. So let's together use our resources, which is our time, energy, expertise, compassions, and money, to create the world that we really want. Thank you.
Wow, Tom, that was fantastic. And we're going to hear from one more investor, Dorothy Adams. And Dorothy, I don't want you to feel rushed because you have a great story to tell. Folks, please enter your questions into the chats because we'll probably do most of our question time in the chat. But Dorothy, I would love to hear your investment journey. Tell us who you are and how you got involved with this.
Thank you, Pam. I hope my audio is okay. And thank you, ASBN, for this opportunity. I'm not only an investor, but I'm also chairperson of the board for Capital for Change, or it's a CDFI loan fund operating in the Northeast and based out of Connecticut. We call it C4C for short because that's what we do. We make acronyms of everything. As many people, my reputation is that I love to spread the good news about CDFI investing. So I'm really glad to be here. I started in CDFI investing. It's about 10 some years ago. My husband and I, we decide these things together, and we've been doing the donating and all that kind of philanthropic work. That's outflow, right? And then we started realizing, okay, there's this, on our investment side, what are we doing? You know, we like Tom, we've been heavily in the stock market with index funds and things like that. But you know, and that the distinction, I just want to kind of get everybody's mind around, there's sort of at opposite ends of the spectrum. Donating, money goes out, investing, money's supposed to come back, but it doesn't always have to come back immediately. And there's the liquidity issue is something, you know, people need to think about. But you know, a lot of the as I think someone's mentioned, the terms on the Cdfi notes are just 1 year, as short as 1 year. So that can be solving a lot of the liquidity issues. I learned about community loan funds about 10 years ago when I was helping 3 of them here in Connecticut merge together to form one larger Cdfi called Capital for Change. And I was so thrilled to discover that there's this thing called, you know, community development investment notes. And it's like, oh, I can put my money in, I can get it back. I could get a set interest rate on it. And it's going to make a big difference in our area. And that was something that made a big difference for my husband and I, because we'd come from the Netherlands and there's generally better housing situation over the years. And the history of what had been happening in Connecticut, has been a fairly segregated state and a lot of redlining. So we were particularly interested in doing something that would be helpful for those, you know, to address those issues. At the same time, I had been in venture capital. So I was keenly aware of the need to diversify by risk. And so that was, you know, a key part of picking a Cdfi, because Capital for Change has about 200 or more commercial loans alone. Those are and we're a little bit unusual in that we have quite a variety. We have housing, real estate, mixed use. We lend to nonprofits. We have thousands of consumer energy loans that we manage on behalf of the utilities. So energy efficiency is a big part of our well-being, you know, what we're focusing on and our purpose. So this size of the Capital for Change was also appealing. I mean, it really meant that it was a low risk proposition. And then on top of it, they've had 100% repayment rate over the last 30 years. So that was another thing I looked at. And, you know, this has been, you know, that was coming from one of the units prior to the merger. I put a link in the chat because it is, while it is not a click of the button online for most of the Cdfi loan funds, it's still pretty easy. There's some documents that, you know, you want to read, a prospectus, et cetera, you know, to get familiar with what each Cdfi is doing, but it's pretty painless and smooth. And so I just wanted to highlight one more thing about the importance of Cdfi funding in the housing space in particular. Those of you who may be invested in REITs or real estate investment trusts, you know, you've seen great performance over the many decades. That's because, as Tom was highlighting, they're pushing for maximum gain, maximum profit. And as that comes through, that and the private equity money, which is really the institutional money coming into the housing market, is scary. It's really quite scary. And there's just not enough that's more of the patient capital and mission and impact related capital. So it's pushing up prices horribly in the housing market, certainly in the Northeast and probably many other places. So Cdfi loans are really critical in this market. There's also this flexibility aspect too. For example, we make loans to, you know, for an elderly homeowner to fix their roof. We are very active on the carbon reduction lending front, from everything from homeowners, you know, insulation, all the way to multifamily buildings in urban areas, in minority communities. So we're looking to do more of that. as back to the concept of how it really changes and dismantles racism slowly. It's not going to be an overnight thing, but we are really focused on that at Capital for Change. We've been providing financing to minority communities since the 1960s. Indeed, one of the groups that came together was founded exactly on the basis of making sure that the redlining wasn't destroying all these communities. So that was the start. We focus on it today. Reading from our website, which is probably a horrible thing to do, but we do really strive to be the lender of opportunity for in these communities of color by ensuring access to capital and staying local and adequately in touch with all of our towns. We have 169 towns in Connecticut, of which 8 are in distress, according to some various studies. So we really are focusing not only on those communities, but also on providing opportunity housing in other communities as well. Some of our products and things that we're initiating, thanks to we've had a racial equity and inclusion committee operating for the last couple of years, which keeps us focused on making sure that our products are into and reaching all the minority communities. Our energy efficiency consumer loans, we are focusing now more on micro enterprise loans to BIPOC borrowers. We already have over 60% of our lending is benefiting BIPOC residents on the commercial side. And we are initiating a new program to support BIPOC developers of rental properties in their communities. So we have been, we're going to keep working on that. That's, yes, there's a lot of Cdfis, but I just want to say it's worth it to have many of them because we are close to the action. Babbie's research and Babbie and Pam's research is just an absolute wonderful gold mine. It filled a need. There are a few other some other players in the marketplace that try to play a role in between from a liquidity point of view, where you can buy and sell a bit more easily. But what happens is their funds come into a Cdfi at a higher margin, and then we have to turn around and put that out. It's a much higher hurdle for us to clear in order to get our outbound lending out in a more affordable way. So, summarizing, like I think I was sort of hinting at, I find the Cdfis are a sweet spot in my investing perspective. It's a pool, so it's pooled risk, and I particularly appreciate that, having seen how straight in high risk investments can go. But it's also very much at the ground level. We're lending straight to the developer, to the homeowner, to the nonprofits as well, doing great things. So that's the right level for me.
That's awesome. And Dorothy, you didn't know it, but actually those last few comments answered a question that was put in the chat about what is the difference between Cdfi investing versus socially sensitive investment funds. And I think, your comments about, the direct impact is,
just being that level, you're just a level closer to the action. Of course, you want to get, a pooled so you can keep it low risk, but your money doesn't have as many steps to go through. Therefore, it's going to be able to be used in a more affordable way by the Cdfis than it would be if the Cdfi got it from another fund,
Yeah.
So.
And you're also eliminating one layer of friction cost.
Yes.
So by investing directly in the Cdfi, it's the most efficient way to get them.
Yeah.
Capital.
And it's, it does require a 1-year hold, so that, you know, for the term of the note. So if that's something you can't do, then that's maybe an indication that it's maybe not the right way to go. But the notes at Capital for Change are as small as $1,000, and we have a number of people who just want to support what's happening, you know, and positive impact in Connecticut. And, you know, we have quite a range from many individuals to faith-based organizations and foundations as well. So it's a great vehicle.
Yeah, well, great. Well, we don't have much time, but I'm going to wrap up by handing the microphone to Derek. And Derek, maybe you could just provide some context about how this work aligns with other ASBN work.
Yes, thank you, Pam, and thank you, everyone. I actually learned so much. And my name is Derek Peebles. I'm the Director of Policy and Advocacy for Inclusive Economy at ASBN. And just want to talk a little bit about the Inclusive Economy portfolio. I'm gonna keep it real brief because I know we're at our time. But, you know, we recognize the importance of building an inclusive economy that really serves the needs and of small and local businesses. Also place-based entrepreneurs, as well as the unique needs of communities that have been articulated by local leaders, many of you that are on this call. So by building peer networks, strengthening place-based financing, and advocating for restorative investments are just some of the ways that ASBN works with communities. So at the intersection of climate and economic justice, our projects have made significant impacts on sustainable communities and economies. And we're often the bridge between small to large investments and long-term sustainability. So we've had great success in supporting the growth and development of small businesses and entrepreneurs, especially those in underserved communities. And so our programs like today provide technical assistance, access to capital, and opportunities for networking and collaboration. And so ASBN's working groups and task forces really provide our members with the ongoing opportunity to shape and engage in our policy work, capital deployment, and our business work. So some of the working groups that we have, one is our Transforming Business Ownership. And this working group is really committed to helping businesses transition into employee ownership, again, which will save jobs and keep wealth within our communities, looking at the recirculation of the dollar. This initiative really has the potential of diminishing barriers for racial equity, as well, since it enables individuals from all walks of life that can achieve an ownership legacy that was previously inaccessible, due only by circumstance rather than ability alone. We also have our faith-based community investing group. And so as Tom alluded to, when most people think of investing, Wall Street usually comes to mind. But as we've talked about today, there's a different kind of investing that we need to be talking about. And that is investing in the ways of beloved community that dismantle racism and oppression. So this type of investing can really have a powerful impact, not only financially, but also socially and environmentally. This is a multi-faith impact investing community. And then real quick, just want to talk about the Restorative Investing Task Force. So through restorative access to capital, the task force is committed to addressing systemic racism. It seeks not only knowledge, but a safe community to share what they've learned with others, particularly those, again, in marginalized and underserved communities. And so as part of this strategic investment approach, the group builds bridges between traditional philanthropy and market-driven impact investing practices. And last but not least, we have our alternative investing working group. And this group examines ways to invest in companies and funds outside of traditional VC channels, such as revenue notes and crowdfunding campaigns. And so again, these innovative strategies have been developed by this working group with the emphasis on education. As a result, impact investors will be able to find new opportunities to support projects that they are passionate about, as well as encourage others who wish to have more control over their finances to do so. And so as we close out, just want to send out a message of beloved community and economics of compassion. We all know, and we're all here today because we believe that the traditional practices of alleviating poverty are historically exhausted. And so we're here to give you this information to discuss alternative ways to where you can actually make an impact in your community. And that's so important to us. And so I'll close with that and turn it back over. But I really want to thank everyone for coming today. And we hope that you engage us in the future of these convenings and discussions. Thanks.
Great. Thank you, everyone. And thank you to our great presenters today.
Thank everyone for attending. So.
Thank you. And please reach out to us if you know of other Cdfis that are accepting investments. We know this is a work in progress and we welcome your input and feedback. And thank you, Pam and Dorothy and Tom and Derek and Felicity for all your work. And thank you all for joining us and the amazing experts on this space. So our emails are in the chat and we'll follow up with the recording and any resources. So this is to be continued. We have much work to do together.
Thanks, everyone.
Have a good weekend.
Thank you.